Good morning. Welcome to this week's market update. U.S. equities took a step back last week, with all three major indices finishing firmly down. The Dow lost 2.9%, while the S&P 500 and NASDAQ lost 2.4% and 2.2% respectively. A combination of tariff updates, a disappointing jobs report, and a warm PCE inflation report triggered a sell-off on Friday at levels not seen since this spring's volatile stretch. Stock futures are positive headed into this week. However, it remains to be seen how much volatility remains in store for the near future. August is historically a weak month for all three major indices. While some key trade deals were worked out last week, many trading partners failed to ink agreements with the Trump administration prior to the 8/1 reciprocal trade deadline. For those nations, President Trump announced modified tariff rates ranging from 10 to 41%, which are set to kick in August 7th. July's non-farm payrolls report was rather disappointing. 104,000 jobs were projected to be added, but the report indicated only 73,000 were. Additionally, the unemployment rate ticked up to 4.2%, and the last 2 months of data were revised lower, which peeled about 260,000 total jobs added from these previous reports. On the inflation front, the June PCE report was warmer than expected. It revealed prices rose 0.3% in June, with a 2.6% annual reading. Despite the double whammy of soft economic data, this may be just what the Fed needs to kick off the rate-cutting cycle in September. CME Group now gives an 85% chance of an interest rate reduction at next month's meeting. Thanks for tuning in. Have a great week.